All right, is the Fraser Valley real estate market crashing? I want to talk about this. There's tons of commentary going on right now across news stations, social media platforms, and I mean like armchair economists right now is probably at an all-time high. My name is That Agent Kelly. I create content daily across TikTok and Instagram. I'm just now starting to do weekly content on YouTube. So if you want to see more content about the Fraser Valley, investing here, Vancouver, Canadian real estate, please subscribe, drop a like, comment, do all that awesome stuff so I can stay motivated to keep putting this content out. And in this video, I want to talk about where's the Fraser Valley market heading, where is it right now, how bad is it, and where are we going? So stay tuned. So first, I guess, let's talk about buying power. As we all know, interest rates have gone up 3% in the last 6 months or whatever it is. Unprecedented interest rate hikes, debatably worse than the 80s when they raised rates 5% in 1 year just because of how much more leverage is being used in our market today. And obviously for every 1% interest rates go up, it usually equates to, as a rule of thumb, a minus 10% in purchasing power, leaving us negative 30% in purchasing power currently. So I mean, if you look at the market right now, let's just take Langley for an example. Condos are down 10% on aggregate pricing, about $60,000, meaning all different types of condo types in every area of Langley is down about $60,000. But the detached market is down about $400,000. The reason why that is because as buying power has been eroded so much, people can only afford to buy condos, and that market's staying relatively strong, still in a seller's market, but detached homes that were on average, I think, as high as 1.8 million in Langley are getting slapped in the face right now because no one can afford to take on a mortgage that big. And I mean, if you look at markets like Alberta, right, that market has seen a very, very small correction. And that's exactly why that is because people just aren't using as much leverage in that market, and that's why the correction has been very minor there. The interest rates don't have as big of an effect in markets where people aren't using as much leverage. So let's talk about where some pain could be seen in this market right now. So I guess the first thing I'll talk about is B loans. People who couldn't get a mortgage through a bank and they had to take a B loan in the last year, a lot of those loans are for a 1-year term, right? So if you took out a B loan last year, you probably took it out at 3-something percent. Now it's coming up for renewal at 6-something percent, right? Those kind of people on private loans and B loans and stuff like that, super highly levered people, they're gonna see some pain in this market for sure. However, that's a very small minority of people, right? And when we actually look up if we look into the makeup of mortgages, right, this is what it is. The distribution of households. 37% of homes are rented, 28% are owned mortgage-free, and 35% of homes have a mortgage. Of that 35%, 29% of them are variable, and only 6% of that 35% of mortgages are on a floating variable mortgage. So the majority of people have taken out something called a static variable mortgage, meaning that it's just the amount of principal they're paying off and the interest within that mortgage payment they make every month is fluctuating, but the overall payment stays the same. If you're on a floating variable mortgage, your payment actually goes up and down with interest rate fluctuations, but that accounts for only 6% of mortgages and 2% of the overall of distribution of households. And within that 2% or 6%, there's probably only a small minority of people who won't be able to pay that new payment. The majority of people are going to sell their cars, they're going to stop going out to the pub, they might even quit smoking cigarettes or vaping before they actually stop making their mortgage payments and lose their home. So do I think people will be forced to sell their homes? I think, as always, there will be a small minority of people, but for the majority of people, there probably won't be any forced selling or panic selling coming in the near future. And the other thing is that the majority of people that have taken out mortgages, right, they weren't buying homes at these prices that we saw back in January, February. If you have a mortgage coming up for renewal anytime soon, you bought your home back in 2017. And if you bought it in 2018, even better, because in 2018 we saw a 20% dip as well. But let's just say you bought it in 2017. You still have a ton of equity in your home. You've progressed in your career over the last 5 years. You've paid down some of the mortgage. You are just should be, unless you've, financed a $150,000 Corvette like I want to, you should be in a better financial position where if you had to renew and get a higher mortgage payment, you should be able to pay it. And a lot of these people will actually be able to refinance and roll the mortgage out a little bit further if they had to. If they had a 25-year mortgage, 25-year mortgage, 25-year, am I saying that right? 25-year mortgage, they would be able to actually refinance and roll the mortgage out another 30 years and drop their payment, which is probably exactly what I'm going to do when mine comes up for renewal in February. So I think for the bulk of people, they're not going to be everyone's going to be affected, but I don't think it's going to be the end of the world for a lot of people that are coming up for renewal. Even a year down the road from now, if interest rates stay where they are right now, then there'll be people in 2018 coming up for renewal, and those people should be in an even better equity position than the people who bought in 2017. All right, trigger rates. This is another narrative being pushed out right now that all these people are going to come up, their trigger rates are going to happen, and basically that's going to force everybody to sell, and we're going to see this massive wave of inventory. Basically, a trigger rate is a clause in a contract if you have a static variable mortgage, basically a mortgage that has an unchanging payment. The clause states that when a certain interest rate is hit within your mortgage, you will be in a negative amortization state. So you won't actually be paying off any more of your mortgage. At which point, then they would ask you to pay a certain sum of money so that you're not in a negative amortization state anymore. A lot of people think that when these trigger rates happen, which a lot of them probably did happen in the last rate hike that we just saw, the 75 basis points in September, that all of these people are going to basically have to double their mortgage and sell their homes, and that's unfortunately not the case if you're hoping for that to happen, because I've spoken to a couple brokers about this now, and basically RBC's policy is that once that's hit, they're going to ask you to pay about $200 extra just so you're not in negative amortization. They're not going to ask you to pay an extra $800, $900 a month. They just want you to pay a little bit of money just so you're paying down some of your principal. And for most people, that trigger clause is going to be about 3% higher than when you took that mortgage out. So if you have a static variable mortgage, I would advise you to look over your contract and see when your trigger rate is coming up and possibly get ready for that, but maybe not, because who knows, the BOC could be done raising rates right now, but it's definitely some good information to know. So let's briefly touch on pricing across the Fraser Valley. Cloverdale detached down $530,000 benchmark pricing. Abbotsford's down about $400,000. Langley's down about $450,000, but here's the funny thing, and I think I touched on this earlier. Condos are only down about $60,000 on aggregate pricing in Langley, whereas detached is down about $450,000. So if you're thinking about upsizing, this is probably as close as that gap between those two product types is going to get, and there's a lot of money to be made in upsizing right now. If you were to wait until the market is hot again, that gap would be a lot wider, because detached usually takes off before townhomes and condos, and then townhomes follow and then condos. So if you're living in a condo and you want to buy a detached house, now is probably the best opportunity you're ever going to get to do that, in my opinion. Now, despite all of this negative news, wars breaking out, China and Thailand, China's economy is basically collapsing, Ukraine and Russia, food prices, gas prices, all of these narratives that are being pushed out right now, that are going to collapse the Canadian housing market. Maybe it will happen, right? I mean, I'm never going to say that it's impossible, but here's the thing. All these problems are short-term problems. Interest rates go up and down, right? They may not ever go to the levels that they were before, but they may not stay as elevated as what they are right now. And honestly, I think people just want to hear that they're going to stop raising rates. I don't think they're too concerned with what the rates actually are. They just don't want them to keep going up, right? Inflation, that's short-term as well, right? It may not be completely transitory, but it should stop soaring at some point. Like, I think gas prices will go down, building materials will go down, food may not go down, because that supply chain can't really be fixed. People need to eat no matter what, right? But I think the bulk of the inflation, a lot of it, is transitory. So these are short-term problems. We talk about the underlying fundamentals of our market. Immigration's the strongest it's ever been. We have a serious supply issue. I mean, even we're at 20-year lows in sales, and that doesn't even account for, the massive amount of population increase we've seen in the last 20 years. So that's not adjusted for population, and we're at 20-year lows in sales. Yet, inventory is still really, really low. Like, I think we're 9,000 listings short of what we should be in the Real Estate Board of Greater Vancouver. So despite all of this negative stuff that's happening, there should be a bunch of inventory coming to market, but people aren't selling their homes. It's going to take nothing short of a catastrophe for the market to collapse, in my opinion. And I mean, now I heard the other day that there's about 80 development projects across the Real Estate Board of Greater Vancouver that are on hold. They've stopped building. So what's going to happen in a year to a year and a half from now when all of those homes that should have been built aren't getting built? We're already at historic lows in inventory. We already have all of these people immigrating to Canada every single year. And a year from now, maybe rates have stopped rising. Maybe they're even coming down, and we don't have the supply to service all of the people looking to live here. And now the new buyer demand that's probably coming into the market, because essentially what has happened is they've solved the demand side of things. They've completely killed demand, but there's still a supply issue there that hasn't been solved. And I would expect at some point, prices will start rising again because of this. So anyways, I know this video is all over the place. I'm getting used to this YouTube thing. It's freaking hard, man, to be honest with you, but I'm going to get better at it. My content will be more quality. It's hard for me to articulate my words and structure the video in a way that makes the most sense because I'm just not used to making videos like this, but I will get better at it for you guys. I know this video is all over the place. I hope you took something from it though, and that's my opinion. Market could crash, but all the underlying fundamentals point to upward pressure on prices, yet prices are being pushed down in the short term by a bunch of short-term stuff that should eventually go away. Anyways, I'm that Agent Kelly. I hope you guys got something from this video, even though it's very unorganized. And please subscribe, like, comment, maybe go check me out on other platforms, and we'll see you guys on the next one. Peace.